Hello dear students, welcome back. Today we will continue with the same question number 2 that we were doing yesterday. Yesterday we completed up to transaction number 4. Today we will continue with transaction number 5. I would request everyone to please check out your textbook and see question number 2 of chapter 5. So transaction number 5th of question number 2 is goods of rupees 35,000 sold for 55,000 to Jaslyn on credit. So here journal entry will be Jaslyn account debit to sales account. Now let us see its effects on accounting equation. Let us see explanation first. Here, as it is a credit transaction, so here our debtors are increasing, and as goods are sold out, it reduces stock of goods. Now let us see its effect on accounting equation. Here there is no change in cash balance as this is a credit transaction, so total of cash balance will remain same as before. Previously we had the cash balance of rupees 30,000. So here also it will remain the same at rupees 30,000. Then there is also no change in bank balance. It will also remain the same as 20,000. But here, as goods are sold out, it reduces stock of goods. So earlier in previous column, we had stock of goods, that is rupees 70,000. So if we deduct 35,000 from 70,000, we will get 35,000. As here goods costing rupees 35,000 are sold out, that's why we are deducting it from stock of goods. As the goods are sold out on credit, it creates debtors. In this case, it creates debtors of rupees 55,000 as the goods costing rupees 35,000 are sold out for 55,000. So Jaslyn has to give us 55,000 in future. So here total of all assets would now be 1,40,000. Up to now we have assets in the form of cash, that is 30,000, in the form of bank balance 20,000, stock of goods 35,000 and debtors 55,000. So now total of all assets would be 1,40,000. Now let us see the position on the other side, that is capital plus liability, that is left hand side. Here in this case there is a profit of rupees 20,000 which should be added to capital. Here 20,000 is profit on sales as goods costing rupees 35,000 are sold out for 55,000. In this way we have profit on sale of goods rupees 20,000. And remember, profit and income lead to increase in capital balance, so they are added to capital. In the previous column, we had capital balance of rupees 80,000. So here also we carried forward it in this column. Here capital balance 80,000 now will be increased because of profit on sales. So now the total of capital would be 1 lakh. And as there is no change in liability, so liability would remain same as previous column. In previous column, we had liability 40,000. So as there is no change, so here also it would remain the same as 40,000. Now the total of capital and liability would be 1,40,000. 1 lakh plus 40,000, that is 1,40,000. And here also on right hand side, that is on asset side, we have 1,40,000. 40,000. So again our accounting equation is satisfied, that is assets is equal to capital plus liability. Now let us move to next transaction, transaction number 6. Goods of rupees 10,000 sold for rupees 18,000 in cash. So here is the journal entry for this. Cash account debit to sales account 18,000. Now as goods are sold out for cash, so here cash balance will increase, and as we are selling out goods, so stock of goods will decrease. So as here 18,000 cash is coming in the business, that's why it will be added to remaining cash balance, that is 30,000 in previous cash balance. Previously we had cash rupees 30,000, and now again cash worth rupees 18,000 is coming in business, so it will be added. So we will get 48,000. So now due to this transaction our cash balance is increased by 18,000, and in this way our new cash balance is 48,000. There is no change in bank balance, so it will be written as same that was in previous column, that is 20,000. So here we will write the same amount, 20,000. Up to now we had stock of goods of rupees 35,000. So here we will write 35,000, and due to this transaction as we are selling the goods, that's why our stock of goods will get reduced. Here we are selling out goods worth rupees 10,000, so we will deduct 10,000 from 35,000. So here we will get 25,000. There is no change in the amount of dues, that is debtors. So it will remain the same as 55,000. Now our total of all assets would be 1,48,000. Now let us see position on the other side. Here, as there is profit, it will be added to capital. Here, goods costing rupees 10,000 are sold out for 18,000. So in this way, we have profit on sales rupees 8,000. So now our capital would be 1,08,000. There is no change in liability, so it would remain the same as 40,000 as before in previous column, that is 40,000. Now the total of capital plus liability would be 1,48,000, that is 1,08,000 plus 40,000, 1,48,000. So again our accounting equation is satisfied. Here also we have 1,48,000 on asset side, and on capital plus liability side we have the same amount, that is 1,48,000. Now let's move to next transaction. Next transaction is goods of rupees 2,000 returned to Himani. Here is the journal entry for this. This transaction is connected to transaction number 3. At that time, we had purchased goods from Himani on credit. Now we are returning goods worth rupees 2,000 to her. So this is purchase return for us. So here journal entry would be Himani's account debit to purchase return account. So let's see explanation of this transaction. See, Himani is our creditor, but as now we are returning goods to her worth rupees 2,000, so here we don't require to pay her 2,000 rupees in future. So in this way our creditor gets reduced. That means our liability is decreasing, and on the other side stock of goods is also decreasing as we are returning goods to her. So goods are going out of business. In this way stock of goods is reducing. Now as there is no change in cash balance, it would remain the same. There is also no change in bank balance, so it would also remain the same, rupees 20,000. Now as we are returning goods, so there will be reduction in stock of goods by rupees 2000. So if we deduct 2000 from rupees 25,000, we will get 23,000. So 23,000 is our new balance of stock of goods. Now there is no change in debtors. So it would remain the same as 55,000 as it was in previous column. So now we have total assets of rupees 1,46,000. Now let's see on the other side. There is no change in capital, so it would remain same as it was in previous column, that is 1,08,000. Then, but due to this transaction, there is change in liability. Our liability is reducing. Our previous total liability was 40,000, but now due to this transaction, here liability is reducing by rupees 2000 as we are returning goods to our creditor. Now as we are returning goods to Himani, that is our creditor, we don't require to pay rupees 2000. So here our liability is reducing by rupees 2000. So by deducting 2000 from 40,000, we will get 38,000, our new amount of liability. So here also our accounting equation is satisfied. On left hand side, we have total of asset, that is 1,46,000, and on right hand side, total of capital and liability is also 1,46,000, that is 1,08,000 capital plus liability, that is 38,000. So we will get 1,46,000. So here also we can say that asset is equal to capital plus liability. Now let us move to next transaction, transaction number 8. Goods of rupees 4,000 returned by Jaslyn. This transaction is connected with transaction number 5th. On that date, we had sold goods to Jaslyn on credit. But now she is returning goods to us. That means it is sales return for us. So let us see journal entry for this. Here our journal entry will be sales return account debit to Jaslyn account 4,000. Now let us see explanation for this. Here Jaslyn is returning goods to us. So here stock of goods will increase. And here our debtors, that is Jaslyn. Now as she is returning goods to us, so she will not pay that much amount to us in future. So in this way our debtors is also reducing. Now let us see its effect on our accounting equation. Here there is no change in cash balance, so it would remain the same as 48,000 as it was in previous column. There is also no change in bank balance, so it would also remain the same as 20,000. Now there is change in stock of goods. Here as Jaslyn is returning goods worth rupees 4,000 to us, so there is increase in stock of goods by rupees 4,000. So if we add this, we will get 27,000 as stock of goods. Then here our debtor is also reducing, that is previously it was 55,000 and now as our debtor is reducing, so we will deduct 4,000 as Jaslyn is returning us goods worth rupees 4,000. Now she will not pay us rupees 4,000 in future. So by deducting 4,000 from 55,000, we will get 51,000 as new amount of debtors. By adding all these assets, we will get total assets 1,46,000. Then let us see what is the position on the other side, that is on left hand side. Here there is no change in capital balance, so it would remain the same as 1,08,000. In liability also there is no change, so it would remain the same as 38,000 as it was in previous column. So total of capital plus liability would be now 1,46,000. That means 1,08,000, that is the balance of capital, and amount of liability, that is 38,000. So 1,08,000 plus 38,000 will be 1,46,000. So again our accounting equation is satisfied here also. Here on the asset side we have amount 1,46,000, and on capital plus liability, that is on left hand side, we have the same amount, that is 1,46,000. So that's all for today. I hope you would have understood. Thank you very much.